Emidio now. I have some married puts expiring at January 21. What criterion do you suggest to roll or close the trade? I think if I see a new married put in that moment that is adequate for the stock, I think to see if a new married put in that moment is adequate for that stock, following the rules of the blueprint. It doesn't have to come up in the search, Emidio, but in general, you're correct. Okay, so what is he talking about here? We're talking about that married put structure I hinted at earlier with the far out put option, controlling risk to single digits, 3, 4, 5, 6%. And then the blueprint, the full work, discusses the proper structure and the 12 different income methods we use to generate income, effectively lower that initial at risk to eventually we can cancel all of the risk and have a bulletproof position on the trade. This is a great time for this topic here, and I'm going to explain why in a moment. So let's see if I have it correctly in my portfolio, Emidio, and if I don't, it's not a big deal. All right, wrong portfolio. There we go. Nope. Fantastic. This isn't the right position anymore, I don't think. It is something that I'm in. So back in April, I bought shares of Kraft at $27.35, and I initially bought, this wasn't real, I bought the January 30 put, and I've sold calls against it, done different income methods and adjustment as I've explained on this position, and so I've lowered the risk. I'm going to show you this in a second. There we go, and there it is. Okay. So I've done some adjustments on this position, and we've effectively canceled the risk. Real quick, I'm going to go to RadioActiveTrading.com. I'm logged in here to my Fusion portfolio. This is where Ernie and I place our married put trades for the Fusion subscribers at RadioActiveTrading.com. Bulletproof position here on Kraft. Okay, so the current liquidation value is about 9%, 8.6, 8.7%, and it's bulletproof. The worst case I could do is make 6% on this position. So you see there's been some adjustment. I rolled the put up 3 times, up to 32.5, up to 35, up to 37.5 at one point, bulletproof 4%, then rolled it back down as the stock fell to lower my cost basis, only had a 1.4% risk, a couple of other income methods to get me at that 6% bulletproof status. That's not what we're seeing in the portfolio. I haven't recorded all of these in the webinar portfolio yet. Let's toggle back. I'm sitting here on Kraft. It's got still the potential to move up. I've got a 32.5 call that's not shown here sold against it. I want that premium to decay with me. That's for November 20th expiration, if I'm not mistaken. I don't think it's the 13th. I think it's the 20th. Just like we talked about earlier with the covered calls, I'm not worried about it. It's at 32.50, but I want that to decay in my favor, so I'm not over adjusting it. In any case, following the rules in the blueprint, Emidio, what do we like to see? Well, I typically will look to close this put or roll the put further out in time if I want to continue the Kraft position if I'm within 60 to 45 days to expiration. Why? Because it falls in line with the rules in the blueprint and one of the 3 core principles, the at-the-money bell curve. This put right now, I should go back to the portfolio. I just want to show the graph there. That's not the bulletproof trade I'm in. This position, my 32.50 put, is priced at 227 right now, 70 days to expiration, which means what? Well, let's take a look at the research tool for the put. What this essentially means is with the stock trading where it is at 31.50 roughly, I've got about $1. I know this is busy looking, but just give me a moment here. We've got about $1 of intrinsic value and about $1.30 to $1.52 or 4% of time premium. What do we know about the time decay curve is that decay rapidly kicks in the last 45 to 30 days. I don't want to lose that. I have it now. I don't want to lose that Emidio. So rather than hold this all the way to January, what I'm likely going to do, let's just go to the Black-Scholes calculator. This kind of shows it. It's going to be very rapid. This is the expected value if the stock stays at 31.54 for the next 70 days. We're at 210 now. By December 6th, we're down to $1.72. It doesn't sound like a lot, but I gave up 40 cents, 1/5 of the time. Now to the January expiration, I'm really close, aren't I? I'm about 45 days out. At 12:20, I'm 30 days out, and the expected bid is $1.49. That's half. No, it's not. I'm sorry. Brain fry. That's 60 cents from where I am right now at about 210, 220. Okay, so that percentage is going. But then in the next 10 days, to the first or the second, we're down to 124. That's about half of where we are. That's the decay we expect. Now, if I buy, you can see this too. If I did buy right now, something I would want that was 196 days out, that's not a really good one. Why didn't it change? Oh, I'm sorry. I'm sorry, folks. I hit the wrong button. There we go. See, that's the blue one. See, now you see gradual decay, and then it's really rapid towards the end. You know, so we're going down. We don't hit the halfway point, a halfway decay from $3 to $1.50 between now and April 27th. This was the May option, right? Yeah, May option. We only lose half. We lose the remaining half in the last 30 days. Okay? So that's what I don't want to have happen. If I still have time value remaining on that put option, I want to close it before I lose all the time decay Emidio as well. I want to take care of that before it decays. I want to keep it in my favor. And then, yes, now I'd consider, do I want to continue Kraft by rolling the position out to, let's say, continuing out to next January, another year, because I'm still bullish on the stock and like the dividend. I'm getting close to the point where I'm making that decision on my Kraft trade in the Fusion portfolio. Why am I still holding on and I haven't made the decision yet? That's why. Why not? I sold a call against it for November 20th. I'm going to wait to get that time premium. My next ex-dividend is on 11/25. I'm going to hold it to then. Be on record of owning the stock, get an additional 40 cents in the position, and then make my decision of when to roll. Why not stay in it? What do I have to lose? Nothing. Roughly 2%, to be honest with you. You saw the liquidation value was about 8.5, 8.6%. If I closed my short call, my long put in the stock now, but I'm 6% bulletproof. I've got a call at 32.50 that I'm hoping is going to expire worthless in 30 days. Let me just, or wow, 14 days, folks. I'm sorry. Let's just go there. Let's see what it would look like. Profit and loss chart. And let's get this to our 6% bulletproof status. My cost basis is really probably only $28.50. And the cost on this was, what did I say, $235? $240 initially. Oh, no, that's what I have left on it. 5.3, it's close. Let's drop it down to 210. Okay, so where am I going with this? Oh, I should have left it there, shouldn't I? I'm sorry, folks. Let me go back to 240 on the put. Let me add my call back in. 32.50. Whatever I sold it for, it doesn't matter, but I'm going to put it in 25. No, let's put in 20 cents. I think that'll be close. Doesn't matter. I don't need it to be perfect, but you guys need me to be perfect. This is where I am right now in Kraft. What do I want to have happen here? And of course, I'm in January expiration. We're 70 days to go. Okay, and so 20 days from now, on 11/25, we'll be at 50 days to go. The worst case scenario is I make 6% on this position, either direction. Best case scenario is a 10.6% return if the stock's right there. And on 11/25, what do I get? Another 40 cents total on the position. I don't like to pre-calculate because my sentiment might change and something else might happen. We get the 40-cent dividend. That lowers my stock cost down to $28.10. 12%. Guaranteed 7.3% bulletproof status. But I'm waiting for this to expire. I'm waiting through 11/25 so I can be on record to get the next dividend of 40 cents to get this position that I want. But when this gets to within 45 days to expiration, 50 days after 11/25, now, Emidio, I'm making that decision. And you might not be in as good a situation with this, I understand it, but that's the idea of the time decay curve. That's very drastic, but let me clear that up and get another one. That's a little bit better. This is 30 days. This is the rate of decay I'd expect in 30 days. This is 45 roughly, and this is maybe 60. I bought the option when it was, 360 days or so out in time. No, it wasn't. I'm sorry. It was April to January. So we're talking 270, 280. It's about 270 days out in time. This is about 150. Okay. This is about 120. And that curve starts to hit at about 90, and then it accelerates drastically. So if the stock stayed the same price and did nothing, I could almost hold it for 4 months and not see a lot of time decay. It's in that range. It's in that 60 to 45 day. That's the time decay curve. It assumes a lot, Emidio. It assumes that IV stays the same, volatility stays the same, and the stock is staying the same. But wherever you are now, if you have time value remaining on your put options and they're out to January expiration, when you get in that 45, 50, 60 days to expiration, that's when you want to consider rolling, because you don't want to give up this amount of time premium on a rapid decay as you're sitting there plotting your next move. Plotting is a bad term. I should say planning your next move. That's what I look to do. And why am I still staying in this if I'm getting within the 60 days? Because I want to cross my ex-dividend on 11.25 with a bulletproof position that may be as high as 6%, 6.2%. And then I can get that up to a 7.3% status. And then, hey, come December, I'm at a 7.3 bulletproof status. Well, December 1st, let's say. I'm at a 7.3 bulletproof status. The stock's still around 31 or 32. I might be able to roll that January put out another 5 or 6 months. And depending on the time value, I still might be able to keep a bulletproof status and just continue milking premium out of this position. Maybe get another 2 dividends as well. It's a great position to be in. Or if I see something that is performing better in the married put search, then I might just close this, take the profit, and take the money from this, put it in that new position. The other answer to your question is, in general, yes. Now, Kraft wouldn't appear in that search right now. I know that. But what is the best strike to go to? For me, this is a different position. For me, I'm looking at my current bulletproof status at that time. And if I can roll out to keep the same rules, a 33 or maybe a 34 put, slightly in the money from where the stock is now at 31.54, and still matches my SIGA model of where I think the stock's going to be trading in the next 20 to 30 days, or along those lines of what I look for. So it'd probably be more like the 33 or 33 and a half. But in any case, if I can still keep bulletproof status, I'm doing it. But you're absolutely right. What I might consider doing as to which put to look for is I might go out to those expirations. Let's just go, we have to go to April, but I'd probably go to January, to be honest with you, on Kraft. What am I doing? I'm seeing the positions here that have the risk that I want. Yeah, and there's no 33. I was wrong. 32.5 is too high of a risk. But for me, what would that be? That'd be a 0.9% risk, because I'm going into it with 7.3% bulletproof status and 7.3% minimum profit. I'm actually going to be closer to 11 or 10% profit. So, but if I go to the 37.50, which I feel is a little bit too deep in the money for me personally, it's 18% in the money. Yeah, I'd really like to see a 33 or 34 strike here. That's what I target. I doubt they have it in January, but let's take a look. I have 35, but nah. 11.6, so I'd be at a 4% risk for another 441 days. I can stomach that. 1% income generated every 100 days to get it back to bulletproof status, easy, very easy. And 11% in the money, right in the wheelhouse of where I'd probably want to be. So that's a potential, but I would be taking a 4% risk, or maybe even a 1% risk if I've got 10% profit, as we were looking at, Emidio. So I understand the second part of your question was saying, would you go to the strike that matches the rules in the blueprint if you were opening it new? And the answer is yes. Okay, that is what I would look for. I'd use the search by symbol tool to say, hey, if I was opening this out, now I'm going a little bit more than a year, what range in the money do I want, and what risk am I comfortable with? That I can factor in the positive returns in that position, Emidio, knowing I might only have a 4% or better, even only a 1 or 2% risk for 441 days by rolling up to the January 35. We'll see what happens with the Kraft position going into the Fusion subscribers at Radioactive Trading. We'll see what happens with the Kraft position going into the next cycle. And of course, as we pass that most important ex-dividend date of when we'd roll to. But to answer your question, Emidio, you want to evaluate again what profits you have on that position. How does that help your current position in that case? And what I apologize. Using the search by symbol, or if it comes up on the search, which position would give you the risk reward that you're looking for to match the rules in the blueprint as a new choice.